Well, those were the headlines we've been tracking for you this evening. The top story: the escalating conflict in the Gulf is disrupting global tech operations and putting billions of dollars in AI infrastructure investments at risk. Ranjana Dhanrajani joins us now. Rachna, Dubai and the UAE have positioned themselves as a safe haven and a third global hub for artificial intelligence. Is that image now under threat?
Well, the conflict in the Gulf is now spilling directly into the global tech industry, forcing companies into crisis mode and disrupting the physical infrastructure that powers the internet. NVIDIA has temporarily shut its Dubai office. In a memo to staff, CEO Jensen Huang said that the company's crisis team is working around the clock as the security situation in the region continues to evolve. Dozens of employees from Google remain stranded in Dubai after attending a regional cloud sales conference just days before the attacks began. At the same time, Amazon has asked corporate staff across the Middle East to work from home, affecting employees in the UAE, Saudi Arabia, Jordan, Bahrain, Kuwait, Egypt, Turkey and Israel. The disruption goes far beyond offices. AWS confirmed that 2 of its data centers in the UAE were directly struck during the attacks, while a third facility in Bahrain was damaged by a nearby drone strike. The company says the attacks caused structural damage, power outages and fires, leaving parts of the region's cloud infrastructure offline and disrupting services businesses rely on, including servers, storage and databases. Beyond that immediate disruption, the crisis is also raising bigger questions about the Gulf's role in the future of AI. Over the past 3 years, the UAE and Saudi have positioned themselves as a third global hub for AI infrastructure alongside the USA and China. The investments are massive. Microsoft has committed about $15.2 billion to AI and cloud infrastructure in the UAE through its partnership with G42. AWS is investing about $5.3 billion in a new cloud region in Saudi Arabia. Google Cloud and the Saudi Sovereign Wealth Fund have pledged about $10 billion for a regional AI hub, while NVIDIA has signed a $10 billion partnership with the Saudi AI firm Humane. Just 3 months ago, the USA approved exports of about 70,000 advanced NVIDIA AI chips to the Gulf, unlocking billions of dollars in new infrastructure projects. But the attacks this week are exposing a new vulnerability in the age of AI. The targets of conflict may no longer be just oil fields or pipelines, but data centers, power grids, and the physical infrastructure that powers the global digital economy. For now, the investments remain in place, but with cloud facilities already struck, the conflict is becoming the first real test of whether the Gulf can safely host the next generation of global computing power. Back to you.
Thank you, Rachna, for those details. Moving on, every year, 11 million students clear grade 12. Nearly 1.7 million people are in the top 15%, yet only about 200,000 secure seats in India's most prestigious institutions. At the same time, rising tuition costs, visa hurdles and geopolitical uncertainty are making overseas education more complex and expensive. Now, Eruditus has partnered with 7 global universities to establish campuses across Mumbai, Bengaluru and Gurugram, offering internationally benchmarked degrees delivered on Indian soil. Now, is this the beginning of a structural reset in India's higher education landscape? And what could it mean for students, research, innovation and India Inc.? Joining me now is Ashwin Damera, the co-founder and CEO of Eruditus. Ashwin, welcome back to Startup Street. The new UGC framework under NEP 2020 allows foreign universities to set up campuses in India. Ashwin, is this the moment India transitions from being a student export market to becoming a global capability hub? Also, for decades, global universities saw India primarily as a recruitment base. What's changed structurally that makes them ready to build long-term academic presence here?
Thank you, Shruti. Look, this is a very important moment in India's higher education journey. And you're absolutely right. I think this is going to be an inflection point where foreign universities now think of India as a market, as a domestic market versus just a source market. What has changed? So primarily, the first thing that's changed is now the regulation. So the Ministry of Education in India through UGC has allowed the top 500 ranked universities to set up campuses in India. So please keep in mind, there is a quality bar. It's the top 500 ranked universities globally. There are about 20,000 universities, so only the top 500 ranked can come into India. And the focus also is more on STEM, because that's where the ministry believes that India needs capability building. But as you can see, there are many, many universities who are lining up to set up their campus in India. Why is that happening? Multiple reasons. The biggest markets where Indian students go abroad to study, US, UK, Australia, Canada. If you look at the US, the number of Indians going there is reduced 40% year on year. The US student population for their universities, by the way, it's an aging market. So the number of kids who are graduating out of school, etc., is actually reducing.
Okay.
And then similar story in UK, Australia, there are visa issues. And then you look at India. India is a country that has, 300 million people below the age of 25. We have 11 million kids finishing high school, 12th grade every year. So it is the most exciting opportunity for any high quality university.
Okay.
And that's why you're seeing this change.
All right. Also, Ashwin, with rising tuition costs abroad, visa uncertainties and global conflicts is, what we're seeing currently, disrupting mobility. Overseas education is becoming costlier and riskier. Can this model meaningfully reduce outbound migration and the billions in remittances that leave India each year? And if even a fraction of the million-plus students studying abroad choose to stay, what does that mean for forex outflows and domestic economic activity?
I mean, we're at a day when the rupee is already at 92. Right? And every year, about 1 million students, 1 million Indians are studying abroad. That's about $70 billion of forex outflow. Now, look, if many of these students decide that there is a world-class university, a foreign university, whether that's a Bristol, which is top 50, University of New South Wales in Bangalore now, which is a top 20 ranked university, that they can go there at 1/3 of the tuition, get the same degree. And Shruti, that's the important point.
Yes.
You're getting same degree by studying in India that you would have had you paid 3 times the fee and maybe a lot more in living expenses had you gone abroad. And so I think that a lot of Indians, look, I'm a parent, I have a daughter who's 12 years old, and I hope that when she's of the right age, of course, she will make her own decision, that she will think about studying in India at a world-class.
Absolutely. Yes. Okay, Ashwin, you've partnered with 7 global universities to enable the establishment of the India campuses across Mumbai, Bangalore, and Gurugram. The doors to the new India campuses will open from August, September 2026 and in phases. So walk us through the operating model. How do you ensure universities retain full academic ownership, curriculum control, and global standards?
Look, the universities will do what they are best at, which is academics, which is teaching and research. And all of the other areas like operations, real estate, marketing are areas where Eruditus as the joint venture partner will support them. In terms of academics, the universities are appointing the provost. The provost is the highest academician in the India branch campus. They are sending many of their faculty, nearly 50% of the faculty, Shruti, will be foreign faculty. Many of them come from the university. Many of them will be hired by the university, but to teach in the India branch campus. The curriculum that is being taught is the exact same curriculum that they teach in the home campus. So if it's a 3-year bachelor's in computer science, it'll be the exact same 3 years bachelor of computer science, same credit hours, all of that. Where we at the Eruditus Group are supporting the universities is helping sure that student recruitment, that they're making sure that they're making the right investments in real estate, right locations. And then a lot of the operations that go towards student housing, career services, that make sure that the students land in a very good place during and after their education. That's where we as their local joint venture partner come in. But academics, the degree, the admission criteria, all of that is set by the foreign university.
Okay. You're launching programs in AI, data science, biomedical sciences, fintech, and game design. How deeply will these campuses integrate with industry, and can they become talent pipelines for India Inc.'s next wave of hiring? And also tell us, what kind of demand visibility are you seeing so far?
Look, all of these universities work very closely with industry. So take the University of Liverpool. They already have an £80 billion facility with Unilever on their campus, where they have a bunch of their faculty, a bunch of Unilever staff doing research. The reason that the University of Liverpool has set up in Bangalore, in Whitefield, is because it is 10 minutes away from the Unilever India research headquarters. Right? Because they want to bring that same collaboration with companies to India. All of these universities have already signed MOUs, whether it's with Axis Bank, with ICICI, or many, many other companies. And many of them, by the way, let me give the example of Illinois Tech. They have a co-op program where you can study 3 days in the campus and 2 days you work. And that leads, that work experience that you get while doing your undergraduate degree counts towards your credit in that degree. So that co-op model is something that will be quite innovative. Related to careers and industry in India.
All right. So is this campus play, Ashwin, the next evolution of Eruditus from medtech partner to long-term academic infrastructure enabler?
Look, as you know, Shruti, you've tracked us for a very long time. Our mission is to make high-quality education accessible and affordable. For working professionals, online works well. But when you're in the undergrad and sometimes in the master's level, it's actually physical experience is very important at that stage of your life. And so when this regulation came 2 years back, we really attacked it on a mission mode. And we said, look, we already have teams in the US, Canada, Australia, talking to these universities. If we can help them come to India, to me, I see this as nation building, right? 20, 30 years from now, these universities will be churning out graduates who will create unicorn. They will spend significant research dollars. It'll end up changing the academic ecosystem in India, right? Just imagine if you have a top 50 world-class university, the University of Bristol, Shruti, they spend every year 300 million pounds. About 4,000 crores just on research.
Yes.
In fact, they have the world's fastest supercomputer in a university setting, £1 billion investment to build that. And now students in India, in Mumbai, University of Bristol is opening up a branch campus, will have the cloud access to that supercomputer. So look, it's going to change the academic ecosystem in India significantly in a positive way.
And we wish you the very best for that. Ashwin Dabera, I'll have to wrap up. Thank you so much for your time today and for joining us on Startup Street.
Thank you, Shruti.
Well, moving on to our hot seat segment. At a time when the cost of developing a new drug is soaring and preclinical failure rates remain stubbornly high, AI-led platforms are promising to compress timelines, lower risk, and re-engineer the economics of pharma innovation. Bengaluru-based Peptris has just raised 70 crore rupees in a Series A round co-led by IN Alpha Fund and Speciale Invest. The company says it is moving beyond molecule generation to building clinical-ready assets with programs spanning rare diseases, oncology, and women's health. To tell us more, joining me now is Narayanan Venkata Subramanian, the co-founder and CEO of Peptris. Narayanan, welcome to Startup Street. Like I mentioned, drug discovery is becoming economically unsustainable, costs double nearly every 9 years, and preclinical failures remain painfully high. So how exactly does Peptris's AI engine change the economics of early-stage drug discovery? What's your true differentiator? How does Peptris reduce failure rates before clinical trials?
Thanks, Ruthi. That's an excellent question. And of course, as you already mentioned, our aim is to reduce the time of discovery from close to about 5 years currently, the preclinical development to about 2 years. That also means that the number of molecules that we are screening, the number of molecules that validating, etc., is also like vastly reduced. From about a few hundreds to thousands that the pharma companies do, we do it in double digits. So that is a big difference when it comes to efficiencies there. And how do we actually preempt failures? So here is the trick. Like there are a lot of failures in the clinic due to what we call as ADME related issues, which is basically toxicity, off-target effects, absorption, distribution, the metabolization, excretion of a drug. Basically, a molecule becomes a drug when it is actually at the right place at the right time in the right quantity. Can we predict it? And that is what we do. And along with its efficacies, we predict all these properties to make a molecule a drug. And that is where the efficiencies come in. That is where the failures are reduced.
All right, Narayanan, you've already licensed your first program in Duchenne muscular dystrophy. How significant is that validation and how close are you, are your other programs to entering clinical development?
So in effect, I think the first molecule being licensed is definitely a very significant milestone for us in terms of being able to both a validation for our platform as well as for a business model, because we are talking about building a drug discovery company out of India, not a services company out of India. So in that sense, this is a real clear validation for us. And of course, this is the first one. We have a lot more to come. And in the next couple of years, we expect to license at least 2 to 3 more assets from our pipeline.
Over the next 24 months, you plan to launch multiple new novel chemical entity programs along with drug repurposing and rescue initiatives. Where will this 70 crore rupees that you've raised be deployed first? Will it be pipeline expansion, talent expansion, or global business development?
I think you made a very good point. It's all of it, actually, in essence. So one of the first things is going to be like we are going to put in some of these money, these resources into strengthening our pipeline. Basically, the pipeline that we have, taking it more closer to the clinic and being able to license it. And the next part, of course, is in terms of both talent increase. We're just an 8-member strong team doing all of this based out of Bangalore. And we intend to have a business development team based out of US, Europe in the coming days, and also increase the team strength to about 14 or 15. That will be the sweet spot where we can actually deliver these efficiencies.
Okay. Peptris operates on a B2B licensing and co-development model with pharma, biotech, and even select FMCG players. What does revenue visibility look like in this model? Milestone-based payments, is it royalties or upfront licensing? Also, if you could take us through your business and revenue growth numbers.
So in effect, the pharma market is actually values the asset, but it always backends the payments. As in, like in essence, like as the first time you said that like it takes a lot of time to get the molecule to the market, so you don't get the money the moment you have discovered it. So most of the time, it is upfronts followed by milestones. Basically, every time it passes through the clinical stages. And the last one is, of course, royalties as we reach the clinic.
Okay.
And so the first molecule will reach the clinic probably in 29, and from further on is where the real revenue visibility comes in.
All right. You're building business development capabilities in the US and Europe. You're going towards global pharma majors to licensing and discovering molecules. You've also said that your mission is not just to extend lifespan, but to improve quality of life. 5 years from now, Narayanan, what would success look like? Will it be a blockbuster drug, multiple licensing deals, or taking a molecule all the way to market yourself?
So I think it will be a mix of it. So in essence, the first one would actually be multiple licensing deals. That will be the short term one, probably in the next 4 to 5 years. The next ones, of course, is like we will get into really getting into the clinic at a relevant point of time, the 5 to 10 year phase. But till then, for the first 5 years, I would say closer to the clinic, multiple molecules licensed.
All right. On that note, it's time for me to wrap up. But many thanks, Narayanan, for joining us on Startup Street, and wish you the very best for all your growth plans.
Thanks a lot. Thanks. It was a pleasure talking to you.
With that, it's time for us to head into a short break, but don't go anywhere. We get you an exclusive chat with Porter's co-founder, Uttam Diga, on the company's growth plans on the other side. Stay tuned. Welcome back to Startup Street. Founded with the aim to improve asset utilization in the intra-city logistics market, Porter today serves a largely MSME-driven customer base. The company turned profitable last year, reported revenues of around 4,300 crore rupees. Madiha Mujawar caught up with co-founder Uttam Diga to discuss Porter's journey. Listen in.
I'll start by asking you about what made you think of launching Porter. What was the idea behind coming up with something like Porter?
So I think it all started 11 years ago. On our way back to home, we saw a lot of these small tempos or LCVs which comply or deliver within a city. And we just went to them, understood their problem. One of the things which we realized about them was that a lot of time in a day, roughly around 4 to 5 hours, they were just waiting idle for a trip. And whenever they get a trip, let's say from Andheri to Bhiwandi, the return was always empty. So we realized that it's extremely inefficient market, and because of the cost structure, 80% of cost was fixed. We thought that if we can utilize the asset well, and hence we can create win-win situations for everybody associated with us. So I think that's what it started. On the customer side, we service SMEs. 80% of our transaction today comes from SMEs. We help them to serve their end customer. We help them to move between the warehouse and so on and so forth. So I think these are the customers who we create value for, and it's very fulfilling experience to solve for these set of personas, which is emotionally very recharging and purposing for us.
Mm-hmm. I also heard in your speech that your first order came 7 days after you started. Where do you stand now? How many orders do you do on a daily basis?
Today we do like close to, I think, little shy of 7 lakh, but 7 lakh orders a day. So yeah, it's a remarkable day that it took us 7 days to get to a first order, and today we are at that scale.
7 lakh orders a day, and how does it translate into business in terms of revenue, in terms of margins?
So last year we did roughly around 4,300 crores, and last year was also the year where we became profitable as a business for the first time. So yeah, I think year-on-year growth has been healthy. So we have been on a good trajectory for the last couple of years.
Okay. Where is demand coming from for you? What is the top demand creating sector for you?
So if you look at our core customer segment, they are primarily MSMEs. 80% of our transaction come from that. And again, I think it's a fairly universal use case. There would be a lot of distributors who would use us for distributor to retail movement. There would be manufacturers using us from manufacturing to transportation hub or distributor movement. And there would be retailers using us for retail to customer, and a lot of contractors using us. So if you look at our customer segment, it is across the industry. It's fairly universal. Across different customer persona, it's also fairly universal. That's the beauty of our business. That's very, very universal problem which we have identified and we are trying to solve.
Okay. What are your plans for fundraise? Are you looking to raise more funds, and how much value has been created for your investors so far?
We have a happy board. I think that's the feedback which I get from them. Overall, at the moment we are not looking to raise money. We feel that we are well capitalized. The business has also turned profitable, and we can fund our growth aspiration to whatever pool which we have. So at the moment we are not thinking about raising funds.
Okay. What is the value that has been created for your investors, who were your early backers, who trusted in your vision?
So last round we have closed at more than $1 billion. So again, I think that's the value which we have created.
What round was that?
It was Series F.
Series F? It was a Series F, like multiple fundraising rounds then, that means. Okay, now you are well funded. So then what are your next plans? Any plans to go public?
Not at least for next 1.5, 2 years. We feel that there is a lot of depth in the business which we are trying to solve, and hence we are focusing more in building the business at the moment.
So what are your immediate expansion plans?
So we feel that there's a lot of potential in getting into more cities in India. So we are bullish about Indian SMEs, more small towns in India. So that's one of the growth lever. We're also thinking that for the markets where we already operate, there is still a lot of room to enter into different form factors of services. For example, the large truck segment is something which we don't do today. There are a couple of white spaces within the LCV market as well. and there can be some certain add-on services which you can do. So I think all these things. So I think there's a service expansion and geographic expansion. These are two important levers, and we're focused in expanding in both.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.